Hey folks, Vic here with your weekly trade video for Friday, October the 4th, 2024. So a lot of traders get into a trade and they find themselves unsure of where to get out of the trade. And in this video, I want to talk about the issue of taking the profit at a logical place and not being afraid to do so. Like there's a difference between being greedy and being smart about when and where to take profit. So let's take a look at an actual trade that Darko pointed out to our members in his pre-market analysis video. And he identified a setup on the New Zealand US dollar pair, which you'll see shortly, back in early August. And that trade is still ongoing as I'm recording this, which is on September the 15th. But even though it's being recorded September 15th, the concept always applies as it has in the past and as it will in the future. You can use this concept on an ongoing basis, okay? And he showed the exact way he was going to get into the trade, where his initial stop would be placed, like he shows the pending orders in advance. So let's take a look at this concept and how it can help you with profit taking. In his PMA videos for our members, excuse me, Darko then starts talking about profit taking ideas. And he was bullish on this pair. And the reason that he was bullish was due to the shape and the price action reading off of the yearly chart. Now, yearly chart. Remember, this is a swing trade, this particular one. But yeah, that's right, a yearly chart, which really helps him develop a trading bias. He kind of discovered this a few years ago, and it's been very, very helpful. And because of this bias, what you want to do is try to hold this trade for much, much higher prices, maybe even to the end of this year or beyond. He's talked about that in his videos as well. Now, before Darko takes these trades, he has a bias in mind. And that bias, like I say, comes from the higher time frames, even up to the yearly chart. And this is proven to be very, very effective in terms of knowing when to be willing to hold a trade. So let's have a look at this in a little more detail. And on the monthly chart, this is a monthly chart up in the upper left here. And after price had made these pretty good swings up, it stopped doing that. And it started going into this consolidation back in like the springtime of this year of 2024. And actually, pardon me, back in 2023 and into 2024. And it's just been in this consolidation phase. And if we go to the weekly chart, I want to show you something here. This is where, like right down here is where Darko had placed his order, or placed his pending order. But I want you to notice that the wave lows on the weekly chart, and this is what he pointed out to our members, and that you can see the wave lows. Like there's one way down here, then there was a higher low, and then a higher low, and then a higher low. So what's starting to happen is that we're starting to get a bit of buying pressure going on here, right? And this was in alignment with his yearly chart, which was indicating, a kind of a bullish bias. And let me show you the yearly chart. Again, the yearly chart is not used for trading, so don't get confused about that. Here's what he saw on the yearly chart, and ignore these lines for now. This level down here, like first of all, price had gone way down to here, okay? And then it rallied up and broke above this high and closed above it and came back down and rallied again and made new highs and came back down. So what's happening, this is starting to show buying pressure on a yearly chart. Comes down to here. See this low here? That's what we call a neckline. That's where price is held. And this is 2020, 21, 22, 20. Now 2023 was an inside year. It was an inside candle, right? Which can very often be the sign of a reversal. We'll see what happens, especially when it happens at support like this. And then this is so far this year. So that's why he's saying that, listen, because we're making higher highs and higher lows here, this could be the start of a pretty good move up. Okay? And you can also see it, like I say, on the weekly chart. And I want to show you this on the weekly chart, this level that I've got marked. See this level here? And it was support in here and here and here. That is a really, really sweet level. Okay, that's a very good, strong level of support on the weekly. And over here, let me just put this back to the monthly chart. Oops, that's the wrong one. Let me just fix that. Go back to here and put that as monthly. See this level? That level on the upper left here, that's the monthly level, which is the same one as this one right here on the weekly level. Okay, that's what we call an identical neckline. And listen, what I've just shown you here is more advanced price action reading, but I hope that you can see, that it makes logical sense. And as I say, Darko points all of this stuff out in advance with all the details and the reasons behind the trade. Okay, now you have to know when the odds favor you exiting the position and taking your profit. Where is price likely to react? Because you just can't sit there and hope that price just keeps going in your favor, because obviously it won't. I mean, at some point it's going to turn around. We just don't know when. And hope isn't a great trading strategy, right? So again, where would it make sense from a probability point of view to take the profit on a trade that's moving in your favor, or at the very least remove the risk from the trade? Got to do something with it. Now obviously we have no idea if price is actually going to keep going or not. But we do know that the odds greatly favor a rally, and this trade, we knew that because of the top down I just finished doing, right? This trade, and let me just show you this. It needed a initial. I'll show you on the 4-hour chart the entry on this trade. It was, I put a circle around here, right down here. This is August the 5th, and that was the entry on this trade. It needed about a 75 pip risk, and as price rallied up like this, right, it's important to remove risk and or take partial profit, but only when logical to do so. You don't do it because you're scared or whatever. You use logic. So where would it be logical to take profit? Well, for this, we go to the higher time frame charts, okay? And since this was a swing trade with an entry on the 4-hour chart, we can look at the weekly chart for a logical level of resistance, and even the daily chart if there's a really super strong level there. But on the weekly chart, the entry was here. Can you see that this is a pretty good level? I mean, there's a lot of, this stayed here for like over a month, just hanging, almost 2 months, just hanging around in here, and came down. So when price gets up to here, would that seem like a logical level? I think most people would agree, right? So there's a time to do something, and that something is going to vary from one trader to the next, which is why it's very, very unlikely that any two traders are ever going to get the exact same results. So for example, if you took profit at this level right here, okay, and that's all you'd done, it was about 260 pips, so about a 3.5 to 1 reward risk, which is excellent. Trader A might be happy with that, okay, and take all of his or her profit there, whereas trader B may take partial profit at that level and wait for much, much higher prices because of the overall bullish bias. But what I want you to take away from this video is that if you find yourself afraid to take a profit because you don't, you just don't know where you should, and you're afraid of missing out on more pips, or that price is going to reverse on you and you'll be left with nothing, then use these levels that I've shown or as targets to aim for, okay? I know that this takes time and experience, but it's very important that you learn to trust price action and that you detach yourself from the outcome of the trade. Trading is not about learning how to win on every trade, because you won't. It's about learning to take trades that give you great odds of a positive outcome, taking the trades and using effective trade management together with trading bias to know how and when to exit the trade. And of course, using all the other components of Darko's trading circle to help put the odds squarely in your favor. By the way, I put another link to that trading circle video in the text below this video or in the email that you received. It's a great, great tool to use for your trading. Okay, so have a look at that. And by the way, it goes without saying that this, what I've just shown you here, this use of higher time frame levels for taking profit can be used for any style of trading, right from micro scalping up to position trading. That's how you get these really big reward risk moves, okay? And beyond this here, as price keeps going up, now we got to look at other levels. If you've held this or taken partial profit, you've got another good level here and here. And in fact, what you could do, which is a good idea to do, is have a look at your monthly chart. Like, let's move this up to the monthly level here. How does that look on a weekly chart? It looks fantastic. That's the same level right here. So there's another very good logical level to look to take profit. And then as back over on the monthly chart in the upper left, there's more levels above. There's here, and way up here, maybe a level in here as well. So, you know, that's how. And what you can do is look to trail your stop as well. There's techniques for doing that. We have actually videos in our members site there on trade management that you can look at as well. So yeah, like I say, I think that you know, to make it in trading, at some point you have to embrace the odds and be okay with the risk. Be okay with taking small losses. That's the profit, because the profit potential in the winning trades are designed to far outweigh any losses. That's the way your trading system should be. Okay, so I hope this video has helped in showing you that just showing you logical places to take profit, or at least remove risk, and to do it without fear. Don't be afraid to take a profit, or at least move your stop up so that you can't lose money on the trade. And don't be afraid to get stopped out for a profit either. If you've moved your stop up logically, then getting stopped out for a profit is generally a good thing. Okay? Well, thank you so much for watching this video. I do hope that it's been helpful, and if it has been, we'd be most grateful if you'd hit the like button, give it a thumbs up. Alrighty? Thank you all so much. Have a great weekend. Take care.